Hi guys, welcome back to Compound and Everything. In this video, we're going to be talking about three of the biggest sort of retail-y tech stocks in Australia and what I like about them, what I don't like about them, and if I'm buying, holding, or selling them at this point in time. Now, to keep things simple, I'm going to break this video into two separate sections. The first is going to be looking at these three companies almost as if they weren't listed at all on the ASX, just mainly focusing on the businesses themselves and trying to take all the noise of the stock market away from them. And then secondly, we're going to move into the books themselves and try and cover a bit of the sort of risk/reward factors for each of these companies moving forward for investors like us. Now, of course, if you are new to the channel, feel free to press that subscribe button and the notification bell next to it. It really does help out in supporting the channel. And of course, if you haven't already, feel free to tap that like button there. We are well on the way to 10,000 subs, hopefully in the next week or so. Anyway, I think it's time we roll the intro. Like I said a minute ago, I want to separate these companies away from the stock market for a second here. I find it helps me sort of to better understand the businesses and not focus on the noise surrounding the stock market all the time and if the share price is fair and if this is right and if this is right, if it's overbought or underbought or whatever it might be. So I guess in order to do that, let's take a look at these companies individually. And I mean the companies themselves. Let's look at what they do, how they do it, and if I think they'll be able to keep doing it this way over the next 10 or 20 years. Now, I'm going to start here with what I think is probably the most obvious of these three that a lot of people have actually been asking me about recently in the comment sections, which is, of course, Harvey Norman. Now, I mean, almost every Australian has had an experience with Harvey Norman, especially if you were a child that was born, probably before 1995. In saying that, even sort of younger people at the moment probably still have something to do with the company. And I think what really surprises me about Harvey Norman is that if you would have asked me in 2010 to pick between sort of Kogan, Harvey Norman, or the good guys on which one would actually be operating 10 years, well, I don't think Harvey Norman would have been on that list. But I mean, there's really no other way to put it. I would have been completely wrong. And when we get into looking into the books a little bit later, you guys will see that there's actually some pretty impressive numbers coming out of these guys. Actually, at the end of this video, I'm going to give my sort of buy, hold, and sell ratings, like I said, on these three stocks. And I think you guys will probably be surprised in what my answer is at that point. And I think the main reason for that is because when I sat down to kind of put together this video and I was doing my research over the last few days, I didn't have much time for Harvey Norman, and honestly, they weren't on my radar at all. However, in the process of researching this video, I realized that I was probably a little bit ignorant towards their company as a whole. Now, that's probably enough at this point in time when it comes to Harvey Norman. However, let's move on to talking about JB Hi-Fi a little bit. I mean, there's not a whole lot here in the sense of value that I can add when we're talking about this company. I mean, we all know that these guys are easily hands down the tech thoroughbred in Australia here when it comes to retail purchases. They've had a very consistently growing revenue stream for a long period of time now. But like I said, we are going to get into the books a little bit later in this video. What I'm really interested in short term is we've got things like JobKeeper, JobSeeker, cash bonuses, small business loans, and all of these types of things that are completely unprecedented here in Australia. And all I think this does in this sector short term is strengthen it considerably. And I mean, that's why we're seeing companies like Kogan and JB go through the roof recently. I mean, now, of course, we know that the measures the government are taking right now short term are sustainable somewhat. However, long term, we don't really know what effects are going to come once that stimulation ends in March. So I think short term, it's very interesting to look at these companies and go, well, I don't want to say they're bulletproof, but they're almost bulletproof over the next sort of 6 months or so. However, let's move on to talking about Kogan here. I mean, as we all know, these guys don't have retail stores. However, it doesn't seem to bother them. And let's be honest, having a retail store in 2020 is not a necessity by any means. Now, I mean, look at companies like Amazon, for example. They've proven the model. However, I only really consider JB Hi-Fi as a competitor to Amazon here in Australia. But I think longer term, it's actually going to be more of a trifecta of companies, which could end up being Amazon, JB Hi-Fi, and Kogan. And if I had to guess right now, if we take Amazon out of the mix, I think that Kogan might win the online battle with JB and eventually become the larger online sort of store here in Australia, at least out of those two, like I said. In saying that, I don't think it will have a considerable effect on JB's trade, mainly because we've seen that they have their dedicated following already. I mean, we can probably attest to the fact that we've all bought something from JB Hi-Fi stores and also bought something on the Kogan website. So it doesn't necessarily have to be a fight to the death between the two. I think there's definitely a place for both of them in this market. So before I go on to my buy, hold, and sell ratings for each of these companies and what my personal plan is over the next couple of months, let's first take a look at the books and better understand what it is that each of these companies are achieving at this point in time. So we'll kick things off with JB Hi-Fi. Currently, JB are trading at 19 times earnings with a market capitalization of just over $5.1 billion. They have an average return on equity over the last 6 years of 32%. Then over the same period, they have an average earnings per share growth of 11%. Now, throughout those same years, they've also managed to grow their net profit by 14.2% year on year. Currently, when it comes to dividends, for those of you that are interested, you will be getting roughly 3 to 3.5% fully franked at this point in time. Now, alongside that, JB are also trading currently 4.6 times book value. Now, if we move on to Kogan at this point in time, they are trading roughly 80 times earnings with a market capitalization of $1.8 billion. Now, of course, not to be outdone by their big brother JB Hi-Fi, Kogan have also over the last 6 years increased their revenue from $175 million in 2014 to roughly $450 million in 2019. Alongside that, they've also managed to grow their earnings per share 25% year on year over that same period. Just like JB Hi-Fi, Kogan have also managed to grow their net profit over that same period by 26% year on year. Now, before their most recent rally, Kogan holders obtained a fully franked dividend of roughly 3 to 4% per share. However, due to the recent share price increase, the dividend is now sitting at just under 1%. However, what I really like about Kogan is the fact that they manage their debts, or lack thereof, very well. At last report, Kogan was sitting on a positive net debt position, which for a company as young as this, growing as rapidly as they are, is incredibly impressive. Now, I did save the most interesting one until last. When it comes to Harvey Norman, there have been some really surprising results coming out of them over the last 6 or 7 years. So let's kick things off with their current PE ratio, which comes in just over 10 times earnings. Now, that might make you think, well, why are guys like JB Hi-Fi trading at potentially 18 to 20 times earnings and Kogan trading at potentially 70 to 90 times earnings? And that's a really fair question because as you're about to see here, their books are pretty tidy when it comes to Harvey Norman's side of things. Now, revenue over the last 6 years increased year on year by 5.7%. Then we looked at operating profits, which have also in that same period increased by 13.8%. If then we look at earnings per share growth, we can see that it has increased over the same period by 12.7%. However, what impresses me the most over that same period was their return on equity, which is 13.4%. However, it doesn't just stop there. For those of you that are dividend investors, Harvey Norman are famous for delivering a fully franked dividend. Now, of course, short term, this dividend has been suspended. However, I think that with a company like this, they're most likely going to be back sooner rather than later. Now, the only thing that does concern me here a little bit is that they do have quite a large net debt position, especially when we're comparing it to their other two competitors in JB and Kogan. Now, I don't know for sure why this market has been neglecting this stock, but if I were to have a guess, I would probably put it down to a couple of things. I think the first might be that people are associating this company subconsciously with the past, and we just associate the other guys with the future maybe, and the other might be a lack of understanding or direction of where the company's heading from here. I honestly don't know what plans they have moving forward. However, before I came into this video, I never once thought I would be interested in this company, and although I wouldn't go as far to say that I'm buying right now, I do think that they are undervalued short term and that they're producing figures that are much more attractive than a lot of listed companies here in Australia. Not just that, but as a dividend investor, this company could very well be a serious option for you to put more research into and discuss with your financial advisor. So I guess that brings me to the part of this video where I tell you guys what I'm doing and if I'm actually interested in these companies. And much like my past videos, I actually did hold a position in one of these companies several years ago, which was Kogan. Now at the point, I held that stock at around $1.60 per share. Now, if I was holding that position and I had been holding it this whole time from those levels, what would I be doing right now? Well, for me, it would be a situation of I think it's time to take the money off the table. Kogan is trading at 80 times earnings. I don't see them earning a valuation like that for a very long time. So for me, if I was in that position, this would be a massive sell. I would not be holding and I would certainly not be buying at these levels. Which then brings me to JB Hi-Fi. Fantastic future prospects and a big fan of the company. And although they are trading somewhat ahead of their times at 18 or 20 times earnings, it isn't completely excessive. So for me right now, I would be holding JB Hi-Fi if I owned that company. I don't see any reason to be selling them short term, especially if I managed to buy in at a price that accounted for a little bit of a margin of safety. So for me, yes, JB would be a hold. Now that brings us to the one that I think is going to surprise you guys a little bit, which is Harvey Norman. So what am I doing right now when it comes to my investment portfolio in Harvey Norman? As a fundamental investor, no surprise, but I don't hold them. However, if I did hold them and had purchased with a margin of safety right now, I would be holding, not selling. However, if I was a gambling man and my risk tolerance allowed for it, I'd personally be putting some money down right now as a swing trade in hope that Harvey Norman follows the rally of Kogan and JB. In times like this with irrational markets, there is risk all around us. However, this is a risk that 2017 day trader Chris definitely would have been all over in the short term. Now, I do have to say that those three ratings that I mentioned above are definitely not financial advice. They're just my opinions and what I'm thinking of doing myself. So if you are considering entering the market in any of those three positions, you should definitely seek professional advice first and figure out if that position is good for you or not. Anyway, guys, that's my opinion on the tech / retail side of things here in Australia right now. If you did enjoy the video, feel free to comment below and let me know. Of course, don't forget to tap that like button. And if you're new to the channel, feel free to subscribe and ding the notification bell. Anyway, guys, thanks for watching and I'll see you on my next episode. Cheers.